All right, ladies and gentlemen, welcome back to the Simple Markets channel. My name is JB, and today we're going to be going over my trades for March so far, how I've performed. For those of you that saw my past videos, February ended off as a 100% win rate month. It was absolutely fantastic, but unfortunately, we do not have the same start to March. Obviously, from an overall standpoint, this is not considered drawdown because the account is up significantly, but we have quite a few trades to go through here. So my goal today is going to be leaving out the break-even ones because those are pretty lackluster. They don't do much. They just reach 1 RR and then they go back to that break-even level. I want to mainly go over the losses and the wins. So what we're going to do here is we're going to actually pull up my trading view chart, and then on the chart, I have them organized so I can go through each one here, and some of them do have more than one trade, so we'll go through those to start. Now, AUDCAD, this was one of my first losing trades of the month, right after this previous winning trade that AUDCAD presented here. We went over this in a past video, but essentially I'm just following this bullish trend overall here. And then after that, I see a high that is broken, following that bullish trend, a good sweep on liquidity, and then a fair value gap. So I go ahead and set my order there from the high to the low at the 75%. This was actually an unexpected news event because I trade on a good regulated broker. I actually did not get any slippage here. In fact, it actually protected the drawdown that I achieved from that trade. Now, this very quickly just kind of wicked me out, hit my stop loss, and then continued a little bit lower here. And then this is the next trade that we ended up taking. And then this is the next trade that we ended up taking on AUDCAD. This was just another sell position here. Sweep on liquidity, break a structure to the downside, plenty of fair value gaps within the range. I set it at the 75 fib, and then we end up taking a loss here as well. So 2 losses on AUDCAD, but they are following that one winning trade, so we can't hold a grudge against this pair. And keep in mind, guys, we are not in the business of avoiding losses. We are in the business of consistency and simplicity. Could I sit here and make 19 different excuses of smart money concepts on why this trade lost? Of course I can. There's unlimited smart money concepts nowadays, so I could go and search high and low for a reason that this trade lost. But that is not how trading is meant to be. This trade is the same thing as this trade, which is the same thing as this trade. If I can keep that simplicity, I can understand that the losses are inevitable. It's probability. If I continue to niche down my plan more and more and more by adding more and more rules onto it just so I can avoid losses, it is going to drastically hurt your performance as a trader and make it so you never get comfortable in your profitability. Next up here is AUDCHF. Same kind of idea here. Multiple trades on the same pair, pretty close to back to back. One of them loses, one of them wins. The first losing trade, I saw a nice sweep on liquidity here, a break of structure. And then we actually had that same news event kind of wick us out very aggressively here. Now, you will notice something in my journal, and I'm going to talk about this a little. Slippage is the idea that when price moves very quickly and aggressively, especially from large news events like this, you can actually lose more than your initial intended risk based on your stop loss size. It's very detrimental to you lower time frame traders out there, but for us higher time frame traders, it is not that drastic. In fact, if we take a look at my journal here, I risked 2% on this trade, but I only lost about 1.05%. This is where slippage actually worked in my favor because I'm on that higher time frame on the 4-hour time frame. So I risked 2% on this trade and actually got to save capital from a losing trade because I work with a regulated broker. There's people on prop firms who got destroyed with this trade in this news event that was unexpected compared to myself who's on a regulated broker. Now, next up here, we have the winning trade on AUDCHF. It's almost the exact same idea. We have a sweep on liquidity here, a break of structure, fair value gap. So we always take that Fibonacci tool, put it down at the 75%, enter there. And then this one very quickly ran to take profit. One of my cleaner trades in March. And then we're going to go on here to EURGBP. Sometimes I sound like a broken record in these trade review videos, but you guys get the point here. I've been told by subscribers all the time, there's gems in all of these videos when I speak through my trades, so I'm glad I can help some of you with these. But the real point I'm trying to hammer home here, guys, is keep your plan simple, keep it consistent, and you will be a far better trader than overcomplicating your analysis, adding new concepts, or the worst of them all, which is trying to avoid losses. Avoiding losses is the worst thing that you can do for yourself as a trader. It's not how trading works. Everybody here understands a coin flip is 50-50. Now, there's 2 options here. I could try to avoid ever getting tails on that coin, which is just not going to happen. I don't care how good you flip the coin. You're not going to avoid getting tails, and you're not going to find a way to do that. Going into extremely complex things like how you flip the coin, the wind speed and direction, just so you can avoid getting tails, compared to the other trader who might just say, okay, tails is inevitable, heads is inevitable 50% of the time. Why don't I use risk management so that when I get heads, I get a 3 times return, and when I get tails, I only lose 1 time? You're now understanding that you're taking a 50% win rate, You're utilizing risk to reward in a proper fixed ratio to now create that system in your favor, as opposed to going too complex in trying to avoid the losses. Trading is the same exact game here. I use the same plan, the same consistent rules. I don't care that I take losses like EURGBP here, because I understand that there are winning trades in the future that are going to come and clear out any losses that are made from these losing trades. EURGBP has a great fair value gap, a break of structure to the upside, and a sweep on liquidity. So that is good enough for me. We're following that bullish trend, and we take a loss here. Next up is Chef JPY, another losing position. We have a fair value gap, a break of structure. I do get this question fairly common. If I am following a very clear trend where I'm seeing higher highs and higher lows, my sweep on liquidity does not need to be too complex. I understand that there is liquidity below this mini range here. There's liquidity below a few candles on the 4-hour time frame. But without getting too complex, if I see that the chart is very bullish and I get a great clear range with that fair value gap, I'm perfectly fine to take these types of positions, and I've done it plenty in the past. So I take a loss in this position and on to the next one. Now, as we just went through, there is always those winning trades that come back and sweep out the losses, and that is what EuroChef did here. Very quickly and easily, we have a sweep on liquidity, following that bearish trend we're looking at on the chart here. We have a break of structure to the downside, a fair value gap. I set my order. Almost instantly, we tapped right into this trade and then very quickly ran toward that roughly 6% gain. Now, AUDUSD, this was just a break even here, and then I even have NZD-CAD currently running at the moment and looking like it's doing fairly well. But without further ado, that is my review here for the beginning half of March so far. These are my trades that I have taken. Myself and the other two Simple Markets coaches are actually going back to some of our roots here, where we used to hop on a trading call every single day. We have started doing that again because obviously it's good for us to catch up every single day, but it also makes the trading a little more fun. Some people struggle with the 4-hour time frame because it is very passive. I hop on for maybe 10 minutes in the morning. I set my orders and I walk away. But I told my students this week, and this was a quote I left for them: don't let life happen to you in the background of your trading. Let your trading happen in the background of your life. Some people believe they came into this industry for money, but really what most of them are seeking is that freedom. Always keep that in mind. Keep that why in your head very clearly. Write it down every day if you need to. Your strategy is not allowing you to achieve that freedom because you're sitting down for multiple sessions a day. If you're really overcomplicating things, creating more stress in your life. As always, I tell you guys to keep an open mind, make changes if they need to be changed. The worst thing I have seen from traders is they get stuck to one system and one hope and belief for years at a time without profitability, and they never end up progressing or making the money they want in this industry. Changing and adapting when something isn't working is the name of the game, and then eventually you will stumble upon something that works. It'll click very quickly, and that is where you should be. Thank you all for watching. I hope you guys have been doing good in March as well. I hope you learned something new today, and I will see you guys in next week's video.